Good evening, everyone, and welcome. Stocks rally. The S&P closes in on a record. The Dow Jones Industrial Average sees a triple-digit gain, but we begin tonight with the Nasdaq, powered today by a 9% move in Cisco, a deal in the online travel industry, and chip stocks like Nvidia and, of course, Apple. The index is now approaching that famous or perhaps infamous level of 5,000. The number is synonymous with the dot-com bubble that peaked 15 years ago in March of 2000 and went bust fast. But the technology sector is a lot different now than it was back then. Bertha Coombs takes a look.
Healthcare tech firm Inovalon's IPO at the Nasdaq market site today is representative of what is fueling the new boom in the Nasdaq composite. Investor appetite for new tech stocks has helped push the index within 5% of its all-time internet bubble high in March 2000. But at the risk of sounding trite, analysts say this new tech boom is different.
In 2000, you had this parabolic move in the Nasdaq that was following the tail end of this 15-year secular bull market. And now, on the other hand, it's been a much steadier, healthy move into 5,000 on what we see as the the early stages of a new secular bull market.
Among the biggest differences, biotechs are now the biggest drivers of gains, up 35% in 2014, as companies like Gilead have brought big drugs to market. Another big difference, tech valuations. Microsoft, the biggest weight in the Nasdaq index 15 years ago, traded at 70 times earnings. Today, Apple, the biggest driver, is valued at 14 times its forward earnings after posting the highest quarterly profits of all time.
I see this as a change in that consumers are spending more on tech versus enterprise. Microsoft was mainly selling to businesses. Now Apple's obviously a very consumer-focused company, and we're all basically spending more money on our gadgets.
While the S&P 500 and the Dow Industrials continue to set new records, the Nasdaq composite has yet to take out that milestone, with big tech stocks like Microsoft, Cisco, and Intel well off their internet bubble highs. Is the Nasdaq return to 5,000 a reason for tech investors to take pause?
Given really the broad-based leadership that we're seeing throughout the market, I think a breakout above 5,000 would only lead to stronger gains for tech stocks.
From a growth perspective and fundamental perspective, I don't see it being a top at any reason now.
The number to watch on the Nasdaq is 5,048. That was the closing high on March 10th, 2000. The intraday high that day was 5138. From the Nasdaq market site, Bertha Coombs, Nightly Business Report.